Hey everybody. All right, today I'm just going to go. What the hell? I'm going to go over the Renko chart and then start looking at some markets and just explain why they are so valuable. Um, First thing is, and I'll also go through accumulation, distribution, and some of that. Anyway, the first thing is we want to see clarity, right? This is the trend. We want to see clarity. I don't know of any, definitely not the bar chart will show you this. The bar chart will not show you this clearly. There's too much volatility and up and down. And even if you have waves on it, waves help a lot for sure. But bar charts typically don't give you by themselves that much clarity. The wave chart will help because it encompasses many bars, especially if the bar is going up a little, down a little, sideways for some time, then up, down, all that. So, but the Renko chart can give you clarity. You see? Down, up. So it naturally gives you that. So like I was saying, the Renko chart can naturally give you that rally pullback, the clarity of that price movement is very, very, very important. Because if you're on especially lower time frames, they whipsaw and all of that, and they can really mess with your perception. But typically, Renko, it because it's price range based, it'll give you that clarity of trend up, trend down, and things like that. The second thing is why Renko is so important is because you can put volume in it, and you will see, like, if you know basic Wyckoff, right? You know that the cycle accumulation, then markup, then distribution, then markdown, right? So markdown. So there's a cycle: accumulation, markup, distribution, markdown. But remember that this is not just in case of trend, it's also in the case of swings, because swing on one time frame is a trend on another time frame. So I'm going to work with this concept here and start elaborating on it. All right, so the first thing to do is you have accumulation. All right, this starts the move. Think of it like that. And you'll see how I tie this to Renko. So accumulation starts the move, and let's do this. Here you have a breakout above this high. Then you will have, typically you'll have a climax. So remember what I'm showing you here. All right, accumulation starts the move, breakout continues the move, and climax terminates the move. Simply stated, one to start the move, one to continue it, and one to end it. All right, so accumulation, then above this high, breakout, then eventually you get climactic action. Similarly, on the way down, you will have distribution over here on the rotation down. And now the question is, where will it go? All right, lots of times it will just test the breakout brick. But a lot of other times, especially if it's a small wave, there will be a tendency to go down to the accumulation brick. So the two spots where the pullbacks test are the breakout brick and an accumulation brick. So let me just sum it up. You have accumulation brick, breakout brick, usually a climactic brick, then a distribution brick, which brings price down to either the breakout to test the breakout or test the accumulation brick, which is usually the first brick that started this entire move. And you'll see it by its volume that it's the accumulating, and it's like your impulse. Boom. All right. So remember this. All right. So let's make it even simpler. You must know that in a swing, what do you have? You have and especially in a Renko, you can see this. You can have accumulation brick. Then, when it takes out a high, like a prior high, you will have a breakout brick. And finally, it will terminate with some type of climax brick. So one to start, one to continue, one to end the move. And this is typically the case with any rally, okay? And then when it goes down, what you get is you get some type of distribution up here. So we'll just call it a, where did I put my tab? Okay. There's a DB, right? Distribution brick up here. And then, so you have 1, 2, 3, then 4. After that, it starts testing. When it tests, it's either going to test the breakout brick. It might go a little lower. A lot of times it'll go a little lower and test the accumulation brick. Okay. This is the natural cycle of the market where I'm sure you have heard of accumulation, markup, distribution, markdown. But now I'm going to show you on the chart. It's not going to be one of those theoretical things on the internet, on those sites, just talking about schematics and stuff. I'll show you this on the chart, that this is reality. It's not, page on some website. Okay, so I'll show you this again and again so you know. First of all, let's go to SPY. Go to SPY. All right, let me get rid of all this, because you can track this and you'll be able to see where to take trades. So we'll just start off at the low and I'll show you on multiple swings. All right, so, and this is all current, like there's nothing here that's from 6 months ago, a year ago, anything like that. All right, so this right here is your accumulation brick, right? But it's not that apparent, but from the rally ensuing that it is, because it's bigger than 1, 2, 3, 4, at least 3 bricks. All right, it's relatively high. It's not really that. It's not that apparent. Okay, but it's there. That's your accumulation brick. Then when you take out a high, you have what? Your breakout brick. And then you have your climax brick. How do you know it's a climax brick and not like a breakout brick? It's because the bar after it should be red. If the bar should be red, because climax bricks typically, in the bar after it or one more bar, the first or the second bar after it, typically the first bar, should be a reversal. Okay. Now it's coming back down to test what? The accumulation brick. Now let's try this one more time. Here, and not all of them will be apparent. So you have to use your judgment here. Like here, you don't see accumulation brick because in the test of the accumulation brick on the way down, there was accumulation. How do you know? Look at this. It has 44 million volume. That's, I don't know, this is bigger than all of the bricks. So they're accumulating here. All right, so that you have to be astute enough to realize, oh, this is the biggest volume in 1, 2, 3, 4, 5, 6. So obviously they're accumulating on the way down. That's why you don't have it on a green bar, you have it on a red bar. So, and it's testing the prior accumulation and just buying more. So now it goes up, 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 up against the prior high. You know this behavior, it's your breakout, right? And breakout should have follow through, and they do. Boom, boom. Now it just goes straight down to test the breakout. That's what it does. Now it goes, but you should know that again, the volume is extremely high. Why? Because as it's testing, they're accumulating. That's what's going on. That's the biggest volume in 23 bricks. What do you think is going on? Especially when it has no follow through and the bar after it is a reversal. So it's accumulating right there. And it's accumulating against their breakout. And I explained that there's two spots you want to see. Breakout and the low bar, which is typically the accumulation brick. So now it tests, you see 76, big, and move sideways, sideways here. Here you have a very clear accumulation brick. What do you have here? Lo and behold, the breakout brick. What do you have here? A test of the breakout brick. And then here, green, green. You know, this right here is the biggest volume in 24 bricks. And what happened after it? Red. What does that mean? Climactic action. That's climactic. That's your climax brick. Okay, now it's going to pull back. And what did I say? It's going to go to two places, either breakout brick or the accumulation brick. All right, so over here, the breakout brick's already been tested. So they already, you know, so chances are either it's going to spring it or it's going to go to the accumulation brick. And this is the accumulation brick. Boom, test. Now look at the volume of the next brick. See how it increases to more than 1, 2, 3, 4 prior bricks? That's because it's accumulating against the past accumulation brick. This is a very common behavior. Like you have accumulation on top of accumulation, meaning the next accumulation brick is typically built on the prior accumulation brick as the pullback ends. Like this is the accumulation brick, or you know, a lot of you might call it demand zone or something like that, where there's a lot of demand accumulation, testing that area, more accumulation. Why? Because they got in it before. They're going to get in it again. So this is your accumulation brick. Boom, boom, boom. Breakout brick. How do I know? Volume increase. Took out a high. Done. Has fall through. Good. Where does it come back? Against the accumulation brick. Boop. Now what do you have? Breakout brick. Because that's what happens after, right? There's your breakout brick. All right. So now you're going to see on Monday or Tuesday, I don't know, it's going to come back, test either this or the low if it wants to hold trend. Okay. So to make this really, really easy, all you got to know is in an uptrend, your accumulation brick, the breakout brick, sometimes as you'll get the climax brick, and then on the way down, you're going to sometimes get your distribution brick, or it'll just come back down to test the breakout, or all the way to test the accumulation brick. And that's the natural cycle that you will see in every single market over and over again. I'll show you right now in the that I was looking at was the TLT. Right there. Right? And then you can verify the accumulation or distribution. Here, you had the breakdown brick. right there against these lows. Where is it going to get tested? Right there. And how do you know it's likely to hold and you really want to take a look? Is you just put your profile on it. Look at the green line. See that POC? That's exactly where it goes. Tap. And that's what you want to see. The reversal occurs. Now the next wave. What happens? Let's take a look. And this is going to be current action today. I'll show right now. Go here, here. There's your breakdown brick. So you want to always mark the breakdown brick. Where's the breakdown brick? Okay, right. There it is. That brick right here, 102. That's a lot, right? That's where there's this line. Okay, now it didn't test on this, but it tested today. So now we move to the right-hand side chart. And as soon as price, where is it? Price goes to this area, you have selling right here. We gotta draw a level. See that? Price went once already and it puked. Then it retested and you see this heavy selling come in again right here. And you know how what really strengthens your conviction? How many bars at this high are overlapping? Can you tell me that? Ooh, I don't have a rectangle. Whatever. So anyway, if you look at this, how many bars are overlapping? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Why is it 19 bars are overlapping like that? You want to know why? Distribution. That's what they're doing up here. This is all distribution. This is what happens when you have a lot of overlapping bars. It's all distribution right here. If you drew a profile on it also, you would see. Let me see the profile. I'm not going to go do that, but based on time profile, for sure. Volume, if you have lots of time, you're going to have lots of volume because they're correlated. And then look what happened. Oop. Where on the test of this breakout, they're at that level. You know, up, down, up, and back down. You just have to just wait for it. Okay, that's all, folks. And this was the change of behavior. Right there. Selling. You know, initially, this was the initial selling on the test. Went up, retested it, more selling, and took it down. All right, that's all, folks. Thank you. So again, just to recap, Renko is important because it shows you clarity, and it also shows you the market cycle of accumulation, breakout, climax in a swing, and then the pullback to test the breakout, or all the way to test the accumulation. This is why Renko is it's like having a volume profile built within the chart itself. That's what this is doing, because I'm profiling the volume in those bricks. And I think that that's very valuable. And it's a wonderful way of taking a daily chart and chopping it up. If you have a daily chart and you want to chop it up into pieces, Renko does that very well. It has your volumes. And then you can see what's happening at the levels. Those, test the breakouts, accumulation bricks, etc. on a lower time frame, like a 5 minute and 3 minute. And it'll be quite nice. It'll show you a lot of clarity. And also you can combine it. Like if you have a daily, you have a Renko, you have a point figure right above it, and it'll give you good targets. It takes a little bit of used to, but you can fit a nice sequential process where you chop up the daily, look for the pullback, use the Renko, see the test, see the level, see what's happening at the level on a lower time frame, and know what your count is on a PNF. So these things can be put together, but it takes a little bit of practice. All right, that's all. Have a good weekend.